I'm Safi Russell from SDR Consulting. We have a virtual practice here in New York, and we do work with clients all over. I'm a CPA and enrolled agent and been in industry about 19 years. And 1 second. There we go. So CPA and enrolled agent, and I've been in the industry 19 years. And we mostly work with small business owners, helping them from business formation all the way through to tax preparation and all the fun stuff in between. And so today our guest speaker is Kamari Ellis, an enrolled agent. And the topic is going to be, do you really need that LLC or S Corp for your business? So we're going to actually have him present for 10 minutes or so, and then open it up for Q&A at the end. So whether you're here on Clubhouse or Zoom or Facebook Live, try to make all three work, and take any questions at the end about the topic or just small business tax and accounting in general. All right, Kamari, the floor is yours.
Okay, Safi, I thought this was going to be more of a conversation, but I can present. Many times we are watching, looking at, and viewing what is called tax Twitter or LLC Instagram. And many times there's a lot of bad information being given out. One of them is everybody needs an LLC or everybody needs an S Corp, when in reality, you don't. A lot of times you don't. It's business, life, money. It's all about context. It's all about the little nuanced details. So just to kind of run through some of the things, right? What is an LLC? What is an S Corp? So an LLC is a limited liability company, not a limited liability corporation. A lot of people are saying that. Again, a limited liability company. It's primarily there to protect your assets, not so much as a personal or business tax saving vehicle. It's there to, again, limit your risk. It's there to limit your exposure to getting sued. So if you have some kind of wayward person who's mad at you for a business dealing, or maybe not even a business dealing, it could be a rental property. A lot of people are buying property in their LLCs, and sometimes people want to sue. So the one thing I always stress is, are you making money yet? Right? Really take an assessment of what you have to lose. And if you were just kind of getting started, you don't have a whole lot of assets, you might want to think about getting insurance or more insurance than actually forming an LLC. And the reason I say that is because what many of these folks are not telling people is that when you create an LLC, again, the IRS really doesn't really care about single member LLCs, and that's what we're talking about. The states do. And if you form a single member LLC in a state, you have to then oftentimes pay an annual renewal fee. For example, let's say you make, I don't know, soap for a living. You didn't sell any, but you brought all these products, all these goods to make all this soap, but you didn't sell any. If you have this LLC in California, you have to pay California $800. I literally just talked to somebody the other day whose LLC was suspended because they didn't pay the $800 renewal fee. Same business, let's go from California to Maryland. If you are in Maryland, you didn't make any money, you have to pay $300. Okay. If you are in Massachusetts is either $500 or $800. Same thing for New York. So you really, again, with any business, you have to understand the law of the land. What are the rules? And so, again, a lot of people are doing this. They're jumping into this thing because somebody on some social media platform told them to do it, or somebody's cousin, sister's brother, best friend suggested that they do it, but they don't really have an intimate knowledge of you. And in order to get advice from anybody, like real advice, there needs to be context. They need to understand the details about you and what's going on. Same thing for S corporations. A lot of people are saying, you want to get an S Corp, you need to get an S Corp. Well, the reason why people get S Corps in the first place, again, S Corp is a corporation. S stands for subchapter S. That is the part of the tax code that talks about corporations. So S corps are for smaller, more family-run businesses or more close-knit type businesses. It might be a partner or two. But one of the main reasons for getting an S corporation is to save money on self-employment tax. Now, if you have no profits, you're not worried about self-employment tax. What is self-employment tax? I hope I'm not losing anybody. Self-employment tax is a tax you pay when you are in business for yourself. If you are a regular solo member LLC, like I was just talking about, and you do a Schedule C, which everybody can do, you have to pay self-employment tax on your profits. And it usually comes in at about 15.3%. And the self-employment tax is the tax that pays into your Social Security and Medicare. So that's the money for your retirement. Now, when you are an S corporation, you get a little bit more leeway, a little bit more wiggle room with paying that self-employment tax. And so you can lower your tax burden. However, number one, if you don't have any profits, it doesn't matter. Number two, if you are an S corp, the IRS wants you to do something called take a reasonable salary. Because again, the main purpose, and again, S corps have a lot of the same legal protections as the LLC has or your regular corporation has, but you get more control over how to pay your self-employment tax. But again, if you don't have any profits, it doesn't matter. And if you're not taking a salary, which you should be, you can get in trouble. So there's a lot of things from an administrative standpoint, from a business strategy standpoint, that you need to do before forming either an LLC or an S corp. But it takes time, it takes consideration, it takes understanding the rules, the tax laws, before you get into any of these things. And that's what I am not seeing out there, out on these tax Twitter streets, or these Instagram S corp streets, or whatever streets you want to talk about or think about. Here's the thing. If you have a Social Security number, you automatically can go into business. You can be a sole proprietor. That's where a lot of people need to start before you start dabbling and spending money on an LLC. In my state, I'm in Pennsylvania. In order to file an LLC, it takes about $125. And technically, you're supposed to run an ad or advertisement. But instead of forming that, if you don't have any assets to protect, you could take that money and put it into your product. Figure out if you really want to do the business. Figure out if the business is really profitable, or you can get it profitable. Then you can take steps to either create an LLC or an S corp. Again, none of them are wrong. None of them are bad. They're all just tools, right? So there's really no bad financial tools. There's really bad financial strategy. And so just make sure you have a good strategy in anything that you do before you actually start. So that's all I have today. It's pretty simple and plain to me, but if anybody has any questions, or if Safi has something that maybe I might have missed, I would love to go through it.
Perfect. Yes, thanks, Kamari, for that. And the key thing you said was the preparation in advance. You know, a lot of people come to us after they've already set up an S corp or set up an LLC, or when it's tax time and they have to pay those annual fees that they didn't know about. So the key is the advanced preparation, right?
Right.
And being that you can go into business for yourself just under your own name, under your social, it may be a good idea to start there and get a feel for what it's like to be in business, how to keep proper records, how to have a bookkeeping system, separate your accounts, even if it's, you know, just under your social, you can still have a separate bank account. Maybe get into practice that way, unless you're already coming in the door with an established business that, you know, you got 50 clients already and you're making thousands right away. Most people are not, you know, unless you bought a business, you know, most people are not starting out that way. So it's about the advanced preparation. So you don't get any extra tax benefits for the most part by just having an LLC or corporation, or S corporation, right? Those tax benefits are in place for business owners in general. Now, other than the you know, savings on the self-employment tax, which kicks in with the S corp, Everything else that is ordinary and necessary to run your business, you would be able to deduct, whether you're an LLC, whether you have a DBA, doing business as certificate, or just under your name on the corner with a, lemonade stand.
But that's real. I mean, I use water, right? I say everybody can go sell water, go buy a case of water. It's hot. Well, it's not hot now, right? We dealing with hurricanes and tornadoes, but
Yeah.
if you find a good stretch of land where you get heavy traffic and you sell water, you can make some money.
Yeah.
I mean, and then, you got to pay tax on your profits. You don't need to be an LLC to do that.
Mm-hmm.
You don't need an S Corp to do that.
Mm-hmm.
You just need your initial investment. Let's say a case of water. Let's say it's $50 for easy math. Maybe some gas to drive to the location. If not gas, if you don't have a car, maybe you get your little cart, you wheel it out, have some change out there so you can make change when people have $50, and then just get busy, hustle it up. It's really that simple.
Absolutely, absolutely. And so there are benefits to those structures, number one being really legal protection. If you are someone that has a lot of personal assets, homes, cars, and, insurance isn't sufficient, then that is the next step up. Having an LLC will protect your personal assets from being jeopardized if your business was sued.
Potentially.
Potentially, if you maintain that LLC or corporation properly. So if you're commingling funds, using your business account for personal and vice versa, that can pierce that layer of protection, and you can that liability protection goes out the window. So that's why it's important to understand all those preliminary best practices even before setting up the company.
Yeah, I mean, you brought up a good point, right? If you were raising a lot of money and you want to bring on investors, you might want to start a corporation from the door. But I don't meet many of them, and those people usually already have good representation, good counsel in place already. They're not going to social media to find advice on taxes or law or entity formation. I don't know. I could be wrong. I mean, are you experiencing anything different?
I'm experiencing where people are trying a DIY model, do it yourself. Yep. Oh, it only costs $120 something to form an estate. However, what else is involved? The publication, the setting up, is this the right structure for you? So there are certain things, you can go to Google, you can go to Instagram, you go to TikTok and get some basic info, but you should work with a professional. When you're going into business, you need an accountant, an enrolled agent, a CPA, and a lawyer, not, a subscription-based legal service, in my opinion, nothing against that, but you need someone familiar with business law, familiar working with small business owners, and you need a bookkeeper, accountant, enrolled agent, or CPA who specializes in small business. They may not know your industry specifically because, it's going to be a first time for everything, but are they qualified, and do you have a good relationship? Can you be transparent with them? It's important to establish that from the beginning. I know everyone's budget's different. I know in this pandemic, money is tight and people are in different situations. So you got to do what you got to do, but you definitely want to get it cleaned up as soon as you do have the funds to, go ahead and get that professional advice. It's all about the advanced preparation.
Right.
And we have a question in the chat here. So the question is it possible to switch from an LLC to S Corp or something else?
Absolutely. Listen, nothing's permanent. Nothing's written in stone. You can easily switch from an LLC to an S Corp. And what you're doing is you're going to elect to be taxed as an S corporation. But there's some things you got to do. You should be ready to put yourself on payroll. So you should have sufficient enough profits in order to hire a payroll service. Some people like to do payroll on their own. I do not advise it. It can be very, very tricky. And I've seen a lot of people get in trouble with it. But be ready to do that. And you don't have to do this, but I still suggest doing it. Keep minutes. Even though you're still technically an LLC being taxed as a corporation, to me, anytime we talk corporation, you want to keep corporate minutes. just to make sure, like Safi mentioned earlier, you don't pierce the corporate veil. And piercing the corporate veils is basically when you're not running like a real business. Your business is supposed to be an alter ego. So for me, I'm Kamari Ellis. They shouldn't be able to confuse me, Kamari Ellis, the person, with, let's say, me, Kamari Ellis, the business. Everything should be done separately. Different insurances, different accounting. I'm not co-mingling funds, like Safi said. All of those things can get you in trouble. Let's say if somebody sues you, because the first thing the attorneys are going to do is see, hey, can we pierce this veil? Can we say this guy isn't really a corporation? He's just a sham. He's just using his corporation as an alter ego just to get a little bit of tax benefits.
Mm-hmm.
And it's not worth it.
Right. Absolutely. Absolutely. And one of the things you mentioned, which is key, is an S Corp is actually not a structure by itself. It's an election. It's a tax election. So your company is still an LLC. You don't have to change your name to corporation or anything like that. You're just taxed as an S corporation, which is a pass-through entity. So with an S corporation, the entity files its own return, but the net profit still flows back to your personal return through what's called a Schedule K-1. So it's not a separate tax. Whatever profit the company makes, it doesn't matter if you take money out the bank or not. Whatever that bottom number is, let's say it's 50,000, that 50,000 is going to flow to your personal return and you're going to pay taxes on it. Yep. If you're paying yourself a reasonable compensation, you're going to pay payroll taxes on that. You're going to get a W-2 from your company to yourself for that. So that's taken care of, but then there's going to be profit left in the company and that's going to still flow to you as well. So there's a question about reasonable comp. Is that a percentage based on income or something else?
It's art and science, right? That's one of the things that a lot of people get caught up on. There's services that do reports to create reasonable salary. Reasonable salary is going to fluctuate from each industry. It's going to be different from a barber, from a lawyer to a mechanic. Every industry is going to have their own level of reasonable salary. I do see some people use a percentage of profits or percentage of revenue as well. Whatever you do, I would say just have a strong basis on it. And I would also look at comparable, let's say, job titles in your industry for what you're doing to see what their salary is. Now, if you don't have the profits to sustain that, you don't necessarily have to worry about it. However, you should still have some rationale, because I believe, and I'm sure Safi does as well, whenever we're working with clients, we want to be able to defend against the big bad Uncle Sam. And so when Uncle Sam comes through, you don't want to be trying to figure out all your stuff at the moment that Uncle Sam attacks. You want to have had that done already. Mm-hmm. So if your rationale for taking profits is, let's say, 25%, and you and Safi get together and y'all say, you know what? We did a survey. We did a quick research. We figured out a lot of the CEOs in this industry take about 25% in salary, and you document that well in advance. You got to digitally store it somewhere, because really you don't need to have physical papers and records anymore, but have it stored somewhere that if the IRS come knocking and they want to audit, you say, here, Mr. or Mrs. Auditor, this is the rationale for our reasonable compensation. However, you didn't ask us, but I'll add this in. The IRS is starting to step up their scrutiny on people who are not taking reasonable salary when they are an S Corp, because they know that people like to be slick, and they know people think the IRS is stupid. But the IRS isn't that stupid, and you ain't that slick. They will come and audit you if they see you are not taking a reasonable salary. Yeah, because you're not paying into Social Security and Medicare, so they feel like you're cheating the government and you're becoming an unnecessary burden. So just have all your stuff in order.
Yeah, and it is an art. It's the IRS is gonna look at your role in your business and say, if you were to replace yourself and bring in someone and you hire them, what would you pay them? Yep. Those are some of the factors that are looked at, in addition to industry, in addition to what area you live in. New York versus Alabama has different, salary requirements. And reasonable comp is an area that the IRS is starting to focus on. It's been brought up before, but from what we're hearing industry wide, they're
You said
definitely
it's not?
No, I said it is an area
Oh,
that
it is. Okay.
they're about to it's been brought up before that they were focusing on, then COVID hit and all that, but now they're getting back on track, and it is an area they're going to be scrutinizing a lot more. So the key red flag, and we have 2 questions I'll get to you guys in 2 seconds, but the key red flag here is if you're taking money out of the business account as a distribution, they want you to be taking that out as payroll first. So if you had enough profit to take out distributions, then you should have enough to pay yourself a reasonable compensation. And that's where they can come in and reclass those distributions to payroll and then charge you late penalties and interest. So that's really how they get you.
It's hefty.
Yeah. All right. So we've got a question in the chat on Clubhouse that says, if you self-fund your business and transfer money into your business account, is that considered commingling funds?
No, it's not. It's considered owner's investment or capital contribution, whatever term, but that's usually how any business is started, right? It's bootstrapped. The owner or owners get together, they put up some money, they put it in the business account, and they run it from there. But that leads me to something else. And Safi, I don't know how deep or how technical we want to go. It's really important that you keep track of all investments that you put into your business. It's also important to track all the distributions that come out, because it forms what we call, or the IRS calls, basis. And they are really, really cracking down on basis. And what's basis? Basically, they want to know what equity or what net worth does the owner actually have in his business, and they want to be able to keep track of that. So that's one of the things they just started cracking down on a few years ago. So make sure bookkeeping is paramount, right? Forget LLC, forget S Corp, forget Corp, forget joint venture, forget sole proprietor. If you want to go on business, please make sure you have a bookkeeping system. I don't care if it's pen and pad, Excel, Google Sheets, QuickBooks. I use QuickBooks. I think Safi uses QuickBooks as well. Obviously, we prefer that for a lot of reasons, but do something. Make sure you keep it. Again, bookkeeping is just how do we keep track of all the financial transactions of a company. You will not believe how important it is. I know it's boring. I know it's mundane, but that is where the real juice is. That's where the real gems are. If we're really serious about having successful businesses that go on and create wealth, you want to make bookkeeping and your accounting a priority.
Absolutely. All right, La Diana, I'm so sorry you can pronounce your name for me, but you can go ahead. She has a question on Clubhouse.
Yeah, this is Ladina. I actually wasn't trying to join you as a speaker. I was trying to.
Ladina.
I did. Be quiet, Kamari. I did have a question though, but I didn't see where I could. Because I just noticed you just said something about you have a question in Clubhouse. I didn't see where I could type it in.
There's a chat thing now in Clubhouse. I don't know how you see it, but it's like a little arrow, and you can send a question in there.
Oh.
Yeah.
Okay. Well, anyway, I guess I can ask the question now.
Sure.
Now, dealing with the S Corp, because I did turn one of my businesses into an X Corp.
Okay.
Now, the thing is where I guess I'm kind of confused at, because I have statutory employees where I only take out Medicare and Social Security. Now, but by me being on payroll, would I still consider myself as a statutory employee, or do I literally have to take out the federal, state, and state taxes?
Could you hear her, Mari?
Yeah, you need to do the whole gambit. You're not a statutory employee. You're an S Corp. You're a part of, what is it? Is it 5% or 2%? You're a 5% owner or shareholder. There's different rules when you are a shareholder in the S Corp versus being a statutory employee or a non-owner employee. So yes, you have to do it all.
Yeah.
So that means okay. So
and your payroll company should be able to handle that.
Yeah, but see, I guess I have to direct them then.
Right.
But with the IRS look at me, because like I said, I only take out Medicare and Social Security for my statutory employees. So the only 941s that they receive when it comes to the federal and state would be from me? Would they know that, okay, I'm an S Corp, and you know what I'm saying?
Yeah, they're going to know you're S Corp. You have to file, what is it, the 2553 or whatever form it is, to elect S Corp status.
I got it from a couple of months ago, but I was just curious, like, am I a statutory employee as well as my other employees, or am I like a full-blown W-2 where I have to take out the federal and state?
Yeah, you're a full-blown employee.
Yes.
If you're an owner providing services in the company, then you are an employee. And so federal, state, and FICA is what you want to take out.
Okay, even though my other employees are statutory, because they was independent contractors. Then the state of Michigan had me I had to start taking out federal and Medicare, but they still control their hours. So I made them statutory employees.
Got it.
Yes. Yeah. And Ladina, also look at, there's a lot of municipalities in Michigan that require local wage tax. So make sure you're compliant. But your payroll company should be able to handle all of that.
Yeah. Yeah, I'm gonna call them. I'm gonna call them.
The main thing with the payroll is that they don't know your role until you tell them, right. Because a lot of times I see S Corp employees not labeled as owners. That's really important when you're setting up your payroll service, because there's certain benefits that have to be reported. For example, health insurance in a certain way on your W-2 if you are an S Corp and you are an employee, and they wouldn't know to report that if you don't mark yourself as an owner and if you don't report the amounts that need to be reported. So we won't get too deep into that, but I know health insurance and S Corps, if you're an employee, it has to be reported on your W-2 to enable you to deduct it on your personal return, and it's not done often. It's not done often enough. So
okay, so by me paying, because I do pay I pay it personal. So you're saying that I could actually just convert over to what I'm paying premium monthly and just have it paid through the company?
You can, but then that amount would need to be reported on your W-2 in box 1, and then on your personal return, you can deduct it out as a self-employed health insurance deduction.
Okay, all right.
All right. Thanks, Ladina.
No, thank you.
You're welcome. Thank you. Okay, cool. So we don't have any other questions at the moment. So what I wanted to just mention as far as corporations briefly is basis. And basis is where it's pretty much your investment in the company, what you have to lose. And if I could try to simplify it, it's like if you bought a stock, let's say you bought Facebook for $50. The most you could lose and claim as a loss is your $50. You can't claim a loss of 100 because you only put in 50. So with an S corporation, you get basis by the money you put in. So like Chris said, when you put money into your business account, that owner investment, that gives you basis. That gives you an equity in the company. When the company makes a profit, Mari, I'm gonna put you in order. Okay, there you go. That's okay. When the business, sorry, I lost my train of thought. When the business makes a profit, it gives you basis as well. Now, when you have expenses in excess of all of that, so let's say you're at a loss, you had a bad year. If you paid for those expenses from a credit card or a loan, that doesn't give you basis. So what happens is your loss is going to be limited to the amount you put in. So if you only put in $100, but your company lost $300, that's a $200 loss. You're only going to be able to claim $100 that year. And then the suspended losses is what they call will carry forward from year to year. Now that's an S Corp. If you were an LLC, you wouldn't necessarily have that. If you're a single member LLC, you wouldn't necessarily have that limitation. If you were just a sole proprietor, you wouldn't necessarily have that limitation. So this is why it's important, if you're not profitable, you don't want to necessarily dive into an S Corp or even an LLC with multiple members, because your basis may be limited, which could limit the loss you take on your taxes.
Right.
So don't want to dive too deep into that, but it is important. A lot of people don't realize some of the downfalls of having an S Corp versus being just an independent contractor. So proprietor. All right. So I think we covered most of the questions. This is a great topic. I know it's a topic that We get asked at least 5 times a year, should I be an LLC? Should I be an S Corp? And I'm hoping that what we've shared with you gave you a little guidance on that. I think the main takeaways are, you can cover yourself with insurance if you have a liability concern and you're not ready to go into the LLC or corporate format first. But if you are truly looking to protect your assets, then having those entities and treating them properly and following all your rules is a way to do that. But tax-wise, your benefits are very identical, whether you're a sole prop, DBA, LLC, or S Corp. The only benefit of the S Corp that may be different is saving on the self-employment tax, but it does come at, it should be an analysis done with that. Because for example, I'm in New York, right? And New York City doesn't recognize S Corps. So you tax you at the corporate rate, which is about 8% and change. So what does that mean? If you're in the city, Brooklyn, Queens, Bronx, any of the boroughs, I only saw, in running some projections, it was like a $2,000 savings, S Corp versus LLC. But then you got to factor in the cost of the workers' comp, if you need that, unemployment insurance, and your payroll service. So what are you really saving, right? So when people come to me from the city, the boroughs, we're not going to just say, yes, you should be an S Corp because you're making 50,000. Let's run the numbers and let's see if it actually makes sense. All right. The one other benefit of the S Corp is that you are going to have some of your profits being paid to you as a wage, and you're going to have withholding coming out. So many times sole proprietors, LLCs, they don't pay estimated taxes. They end up owing a whole lot when they file and they're caught off guard because they're not disciplined. If you know that's going to be you, the benefit of the S Corp is that, pay yourself a higher wage, and then you can at least have all your taxes being paid through that way. Yes, you may pay more payroll taxes in the end, but if you have an issue with keeping up with your taxes, it is a way to help you stay on track and pay in as you're making money throughout the year. So those are just some, nuances as far as the differences between the two. We're gonna go ahead and wrap up if no one has any other questions. Checking all the
Sophie, I have something.
Yes, go ahead. Come on.
You brought up something I think all business owners should be thinking about: running the numbers first. Would you agree that that should be the default answer to everything in a business?
Every business decision. Should I hire? Should I advertise? What's the number? What does the number show?
Right.
Agreed.
And and so that goes the same for your S Corp, your LLC. What's the total outlay of money you have to put out? What's the potential benefit that comes back? Yes, some of this will be guesswork, art and science, but it'll at least give you more of an informed space to operate from instead of just kind of operating in the dark and guessing.
Absolutely. Absolutely. We got a Clubhouse question. Can you define assets?
I feel like I want to go to my accounting book, but that's not going to be a super easy answer. So asset technically is, what is it? Property, equipment, capital, right? So an asset is basically anything that you can own that potentially can generate money for you or can appreciate in value. Examples of assets are stocks, real estates, business, intellectual property, asset equipment, right? Cars, trucks, potentially. So just about everything can be an asset, but not always.
Yeah. Typically, if something is has a life of more than a year,
Yes.
that may be considered an asset. Your bank account is an asset. It's something that the company owns, like Kamari said, that can produce a future income. And it's something that's going to last for more than a year. So if you buy a new computer, it's going to have a life of more than a year. Nowadays it's probably 3 years, who knows, but technically it's given 5 years for tax purposes. So I hope that answers the question as far as assets. It's pretty much, things that you own that can last more than a year, and they may be tangible things you could touch, but they also may be intangible, like software or what's the other word? When people, intellectual property, that's the one.
Yep,
right?
IP, yep.
Right, IP. So hope that answers the question. All right, I think someone on Clubhouse had another question. 1 minute. Thank you. Okay, you're welcome, Brandon. Excellent. All right, so final call for any questions. If not, we're going to go ahead and close out with our outros here. You're welcome, Jessica. And Dee has a question. Hold on. All right. See if I get this to work. Hold on.
This is really cool.
Thank you.
I was trying to go into the clubhouse and invite some people, but I got the feedback, so I apologize.
Yeah, the technical stuff threw me off. Okay, Dee, you can speak now.
All right, thank you so much. What is the reason for paying estimated taxes?
Did you hear?
Yeah, the reason for paying estimated taxes is because the IRS knows, well, the IRS sees that you make over, I want to say it's $1,500 a year, they want you to pay in advance because they know that when people get too far behind in taxes, they have to then kind of chase you down with collections, and they don't want to spend the manpower on that. So they want you to pay in advance.
Yeah, and so there's estimated taxes required at the federal level and the state level if your state has income tax. And the IRS's threshold is if you're going to owe more than $1,000 when you file your taxes, then they're going to penalize you for not having paid that quarterly throughout the year.
It's funny. You brought up 1,000 because I always go between 1,000 and 1,500. I always get confused between the two.
Yeah, there's numbers all over the place because there's the $400 of self-employment net income, and then the state have a different number. We got too many numbers. So yeah, if you so the estimated tax penalty, I can even give you the flat number. It's like every quarter they assess a certain percentage for your underpayment. They want you to pretty much pay your taxes throughout the year, just like employees do. That's why the requirement's in place. And so the state threshold for estimated payments is likely different than the federal. So you're going to want to know both. You can wait and pay at the end, but you run the chance of getting behind the game, like Kamari said, and end up owing year after year. They may force you to start making estimated payments in different ways if you have other sources of income, if you don't do it voluntarily. And so that's the main reason, because it's the rules if you're going to end up owing, and they want those payments throughout the year. So there's different ways you can handle estimated payments. Let's say you were an S Corp, as far as your election for tax purposes, and you pay yourself as a W-2 employee. What you could do is bump up your withholding through your paycheck to cover the extra profit coming in through your company instead of making estimated taxes. Or you just have to make them, and you can make them preferably electronically as opposed to mailing them in. Does that answer your question, Dee?
Yes.
Okay, great. Thank you. All right, last call. Good questions, everyone.
Yeah, great questions.
Definitely. And so I'm going to go ahead and wrap up, and then Kamari, have you kind of close out. So just for anyone who joined in at the end, Safi Russell, SDR Consulting, Inc., enrolled agent and CPA based in New York, but have a virtual practice, and we work with clients all over. I mostly work with small business owners, helping them from business formation all the way through to tax preparation and all the fun stuff in between, as well as some tax resolution work for people who do get into trouble with the IRS. And special guest speaker Kamari Ellis joined us today to cover, do you really need that S Corp or LLC to run your business? So Kamari, if you could just close out with your outro and how to contact you.
Sure. Well, I'm gonna tell everybody to contact you. I'm Kamari Ellis, founder of the Philly Tax Team. Been in the tax industry for almost 25, almost really more like 30 seasons, because my dad started me when I was like 12, but don't be counting my age. It was a pleasure being here with you all. If you guys have any tax questions, please work with Safi, direct them to Safi, because she's very confident. As you see, she's very thorough. But thank you for having me here, Safi. I can't wait to have you back or be back. Yeah. And I need to have you on my show as well. So
sounds like a plan. Tax. Sounds like a plan. And we will be here not Friday the 10th, but Friday the 17th with the next topic. So every Friday, 12 o'clock, Basic Business Friday is the theme. And so feel free to spread the word. I'm going to see if I can keep going with the Clubhouse and Zoom and Facebook Live all together, because I know not everyone's on Clubhouse. But definitely, if you're on Clubhouse, join the SDR club. You should be able to see it, or I'll invite you to it later. And I look forward to seeing you guys on the 17th when we're back at 12 Eastern. So thank you again, Kamari. And I'm going to be sending some people your way, because you know what you're doing as well. And you definitely have finances as a whole covered. You know, you got your podcast that you do. So definitely connect with Kamari. If you need his contact info, feel free to reach out to me. I know I can't share it through Zoom, but Clubhouse. But definitely, you know, we're in this together, guys. We're going to be heading into another interesting tax season, as the last two have been, and so pray for us. But we're going to do our best to make sure our clients are taken care of. So everyone have a happy, safe Labor Day weekend, and we'll see you on the 17th. Thanks, Kamari.
Thank you.
All right. Bye-bye.